got to do a victory lap when you win, mate. You get so few in this game.
It's true.
Let's do it. Hi, I'm Tobias Carlisle. This is the Acquirers Podcast. My special guest today is Maj Soueidan. He's the founder and manager of GeoInvesting, and he's the top-ranked member in the Microcap Club. We're going to talk to him about his 30 years of investing right after this.
Tobias Carlisle is the founder and principal of Acquirers Funds. For regulatory reasons, he will not discuss any of the Acquirers Funds on this podcast. All opinions expressed by podcast participants are solely their own and do not reflect the opinions of Acquirers Funds or affiliates. For more information, visit acquirersfunds.com.
I'd love to talk about my the really early years of my journey. At some point, my dad's influence. I love him to hear that. My dad's like 78 years old, and he had really incredible influence on me. So maybe we could have that conversation.
What did he do? What happened?
I mean, he's who got me into this. My dad got me into investing. And it was in 11th grade. I actually had participated in a paper investment contest, which kind of really propelled me. But before that, I used to sit there and watch stock stuff with my dad. I wasn't really talking about stocks. I was just watching it with him. He would be in his basement. We got called a stock cave, and he would come out. I got this great stock, and I'm like, "What are you talking about?" It was IBM. No, it's famous artist brands. Like who? So I was getting my first nano cap lesson from my dad. I actually because of him, he gave me the book to read, Peter Lynch on Wall Street. I started doing because of him, getting jobs to investigate companies I wanted to industries I wanted to invest in. So he was investing in artistic greeting. I went to work at Famous Artist Brands, which is a greeting card company, and he put it all. Just watching my dad do it, but watching him do it in a way that he was never stressed out about it. I remember, the 87 crash and then the Gulf War stuff. And he was always like, what should I be buying? I heard him say that, right? So it was interesting to see that whole kind of calmness in it. So I saw him go through that. But really, he bought an OTC stock. I saw my dad buy OTC. This is when you could, it was Wall Street Journal had a section for OTC stocks. I didn't even know that, right? My dad showed me. They track new highs and new lows in the Barron's and then Wall Street Journal. So this little OTC, I don't even know what was called OTC at the time. They called it something else in that section. My dad you're hunting over here? So you couldn't get anything on these things. So I started buying OTC. I was he was my he got me right into it, right? And
how old were you when you started?
Well, that was I think the first stock I probably bought was probably 19-ish. But I was investigating 4 years prior, doing investment contests and really saving money, obviously.
Yeah. The first
stock I bought, coincidentally, was during college. It was Storage Technologies. The symbol was STK. It had just come out of Chapter 11 bankruptcy. So my first stock I bought was just nothing normal, right? Not in my core bucket. It was this thing, and I made 50% of my money on this thing real quick. But funny story is that in 11th grade, when I was in that stock contest, I bought that stock and put all my money in that one stock, concentrated investor, right? Boom. And I didn't know they were going through a Chapter 11 process. So I lost it all. So my first lesson was to do your fucking research, dummy, right? But I got my revenge. That's the first stock I really bought was SDK and out of bankruptcy. I was wow, there's a lot more than just what they're teaching you in school, right? But my dad, put me in this kind of look for these obscure things. These stocks ideas, and it was. I'm glad I wasn't just introduced to buying IBM, Intl, and all these big cap names. It's not fun to me too.
Yeah. They don't move enough up or down.
No, they don't. They don't. Yeah. And my dad's still doing. He's still investing today. Yeah, he's still investing today. He still has his passion for it.
What's he like? I don't know why. What sort of stuff's he? Same thing.
He's changed a lot. He's changed. He's microcap still, but he does a lot of biotech stuff, and he's done pretty well at it actually.
Yeah.
But he's just still he buys some bigger stuff now too though as he got older. It's good to see he's still doing it, and I hope to be able to do that myself when I'm 78, 80.
70's young. If you're an investor, you still got 20 years.
It really is.
It's 20 years. You're still running it easy.
Yeah, he told me actually when we were going through the whole COVID crash, he said, I'm done. I sold everything. Right. 2 weeks later, sending me stock things. He's already back into it. Going in there buying stocks already. And So it's fun to watch it, and I'm really grateful that he put me on that path, and he gave me the book. Well, the day he gave me One Up on Wall Street was the day I was born in this. I was a full-time investor that day. I read it 2-3 times like that. He gave it to me this summer of when I think of my freshman year, and we were off. Me and my buddy took a road trip to Alabama. I had just read the book twice, and we're taking this road trip to Alabama to meet from Philadelphia. It's a long trip to meet to visit his ailing grandparents. And all I'm thinking about the whole time is I forgot the book. I'm like, oh, I can't. This is on this long trip of a book. We end up seeing his grandma, and grandfather, seeing them off, and decided we're gonna keep on going to Florida. We're just because it was like I think it was Memorial Day weekend or late. I was Memorial. We're just gonna go to the beach and just party. Not thinking there were no rooms. You couldn't get anything. So I ended up sleeping on the beach. I'm sleeping on the beach, taking the stocks, waking up with a pelican in front of my face. It was an amazing time. Gets in that book, road trip, nowhere to sleep, nowhere to shower. And then without my book, and I got home and I was born, and it was into this whole this full-time investing thing. I'm just so glad it happened.
Oh, that's great.
Someone had called me who's in the industry in terms of doing all the proxy stuff and everything, and with the whole Robinhood thing. With this fraction trading, you can trade in fractions right now. You can buy shares in fractions, no commissions. So if you open up a Robinhood account, you get these free shares, right?
Yeah.
You're never gonna sell them. You're just like this millennial. You're like, I got 0.0005 shares of Tesla. I'm gonna keep it for my trophy. And so you're taking float away from the market. And then what I was learning, so the proxy laws are all screwed up. Where
oh yeah, how do you vote them?
But that's good. You have to vote them, right? So here's a situation. The way the pricing works and what a company pays to a proxy company doesn't change. It's per person. It's a per fee per proxy.
Oh, no kidding.
Right? So he was showing me hey, look, I have this nano cap company, never any volume. Now it's got all these shareholders now, right? Because Robinhood just gave away all these free shares. So Robinhood makes money because Robinhood and even makes a deal with the proxy guys like an ISDR, for example. Yeah. So and then we'll give you our stuff. So they cut a deal, and so the more people who own shares, the more money. So it's this whole thing going on, right? And so now as you take that combined with so there's incentive to keep creating this buy volume, right? There's incentive to give away free shares they're so minuscule, you're not even going over there. You're never going to sell them. So you're taking float out of the market too. So and it's it's ways. I think that's kind of what's partly going on. And between you and me, you could talk to Brian from ISDR called me and talked about that. He was wondering if I could write an article on it maybe or something. But so he's torn because he's making money from it. Because Brian, does all the proxy stuff at the end of the year, reports, and he's like, but Maj, this isn't right. And I was at a bachelor party this is before COVID hit, and I'm sitting there getting conned, drinking the shots, whatever, and this girl's like, what do you do for a living? I'm a full-time investor, and oh really? I'm investing now. Oh, here we go, right? And she pulls out her Robinhood. What do you own? She has Tesla. She's like, I don't know what I'm doing with all this stuff, but whatever. I have all these stocks. I'm an investor now, and she's happy about it, and she's never going to sell the shit, So it's just you see that kind of. It's the same with the crypto, right? You saw all these people getting all crypto who had no idea what they're buying. The dangerous thing here, though, is there's actually a really good market for stocks and up the stock market and the way it plays out, and it's not fraudulent into ways crypto was fraudulent. Crypto had to end because it was fraudulent. You own nothing, right? So
I don't know if crypto's ended. Some of it's ended, but I think that Bitcoin and Ethereum and some of the bigger ones is still going strong.
I should say that. Yeah, I do believe in the whole blockchain and the revolution there at some point. I own some Bitcoin, I own some Ethereum, on Litecoin.
The more they torch the currency, the more you got to start thinking about the alternative ones, right?
I'm amazed. I'm amazed. You know, what's going to happen? Maybe nations are going to adopt their own currencies, cryptocurrencies, right? And I don't know what that does to a Bitcoin or Ethereum at that point. But I'm
They're just
surprised
mediums of exchange, right? They're just currencies.
I can't believe they haven't gone up more. You know, but I remember watching this. Those altcoins and some of the. Would you watch some of those pyramid scheme?
Oh, there's some shit coins out there.
Like BitConnect.
You call them altcoins, shit coins.
Yeah, shit coins. Yeah.
What was the story there?
So man, there was this level. I play guitar, right?
I can
this
see
is how
it.
You know things are. This is you know things are peaking, right? When you have back in the internet days, it was the .com. You're at a barbecue and someone's talking about, oh, I bought this .com company, and 2 weeks later it's crashing, right? You have all these wonderful little kind of signs. So I was taking guitar lessons one day. He knows I'm a stock trader, my guitar teacher. And he has these computers all up for his musician stuff and recording. I walk in one day, I see charts. What's going on here, dude? It's crypto, right? And I didn't tell you this, for the last 6 months I've been doing crypto. I'm doing crazy, man. Look what I'm buying over here. And he sounded really intelligent, like, okay, here we go. But he was making all his money in this pyramid scheme. Basically what it ended up being, where it was called BitConnect. If you want to look it up later or something. And there were it was a situation where you would participate in this ICO, right? And you would you buy the BitConnect crypto coins, whatever. And then for owning that, for keeping them there, they would pay you interest on that, just for owning it. Nothing else going on. If you own this, we'll pay you 1% a day, right? But you can't withdraw your money until 3 months. So they had kept having 3 months to bring people in, right? They said they were investing in crypto and investing in algorithms, all this stuff, right? But they were just taking the money and pocketing it. And if you got it really early, you made a lot of money, right? But then what happened then was it was probably the same outfit doing this, continuing to open up other of these little BitConnect type of different names, right? Pyramid scams. I forgot they were money lending or whatever they were called, some kind of weird name. And they finally blew up, right? And that's that cryptocurrency bubble really obliterated at that point, because all these millennials are putting their money in that shit, and it was interesting watching. And the SEC really couldn't do much about it. These guys are all hiding, right? You don't know who the hell they are.
Well, I knew it was very, very frothy when I was at an Apple Genius Bar waiting to get, I can't remember what it was, getting something fixed. And the dude beside me, he said, "Do you want to see something crazy?" And he showed me he'd filmed himself buying crypto with a credit card on, like, there was an ATM, crypto ATM in the mall. And like, there's so much volatility. He was showing me as he was buying it, like, it moved. This is when it was like 20,000, like it was right near the end, right near the very peak. And he showed me it was moving like 1,000, was chopping all over the place as he was trying to buy it. And I was like, what did you pay for it? And he's like, oh, I don't know.
That's just great. This is awesome, man. Yeah, I mean, it was an amazing weird time. And you could get, like, I was definitely intrigued for a while, I was like, I still like the Bitcoin and all that stuff, but I was looking at these because you had some, like, reputable investors, like, I think Temper, was he investing in some of this stuff? Investing in some of these altcoins, like, oh, okay, but they actually owned an asset because they were pre altcoin, right? They were buying it, right? They actually own an asset, but you bought it when you went and bought an altcoin in a project, you own nothing. That was the beauty of it for the founders, right? Because they could give away allegedly, they give away no equity.
Yeah.
When they sold the coins, right? And it made no economic sense at all, right?
I mean, I kind of get it from the perspective of, if you were looking at going and doing this is kind of germane to the discussion. Like, if you're looking at doing a microcap and there's some sort of underlying business, if you could get some sort of coin instead of a shareholding, and you could get the flows from the business and pay it out through the coin, that's an interesting idea. Like, I can see that. And there's no reason why it has to be outside the regulatory system. It could be inside the regulatory system. Do it properly. But
that's the key. Can you give us a right to cash flow, right?
Yeah.
Yeah, that would be that.
Becomes interesting.
That's how it should work. Yeah, very much. And now you can not dilute ownership, which is great, but still let people collect dividends.
Yeah.
I love that was the case. I wonder if that's where we'll go eventually here.
Well, I think that makes a lot of sense because it solves a lot of problems. I don't know how you vote through something like that. Like that, clearly the proxy's an issue and some of the rights attaching to it. Maybe it's too complicated for that kind of thing, but It's just an interesting thought, just one I've had.
And you could maybe have like non-voting kind of right. Maybe this coin.
That sounds great for the issuer.
Yeah, it does, right? But as long as you have like maybe there's some like rights to the cash flow still, like dividends, but without like voting rights.
It's like a pref, something like that.
Yeah. It's pretty interesting.
Mate, I saw in the thing that you sent, you've been investing for 30 years full time.
Yeah. So my investing journey started when I was in probably 11th grade high school. And I was investing my first second year in college, second semester in college. I really started investing, and most of the money I was making came from. I still had the odd jobs and stuff, but I always considered myself to be, hey, this is where everything else I'm doing is part time, working at Vanguard and that stuff. Yeah, but my really full time gig where I just said no more other income was 1994. So it's been a long time.
And so how are you supporting yourself?
Dude, man, it's an interesting. I believe you wouldn't. If I told you, wouldn't believe me.
Well, tell it. That sounds like a good story.
Yeah. So, I had during college I saved like $3,000, right? And by working, and I wasn't really investing. Still learning the craft and stuff, doing my investment classes, and not getting a lot out of my investment classes really. And I would just spend most of my time going to the library, reading Value Line, do the Barron's thing, and tear sheets. My buddy had a good friend who worked at Dean Witter. I worked at Dean Witter at the time, and I was in a car accident. I broke my leg or my ankle. I couldn't do anything, so I ended up getting an internship during the summer, doing cold calling at Dean Witter. And I would just get that out of the way, Made no sales. I was horrible at it, and I just read everything. I said, "Oh my God, look at this information that I don't have access." This is back like in the late '80s, in the early '90s. I didn't have this, right? I was like, "Oh my God, the value line's great, but look at all this stuff here." So I started getting an interesting look at what value these institutions had. And this is awesome to have it, right? So I always learn how to pay for your research. Just do it, right? But I started really getting my first inkling there, and I knew that I just do the math in my head. If I get a really cheap apartment, and get a decent job, invest, work at Vanguard, save $30,000 while I'm doing both of those. I wasn't making much at Vanguard at the time. I said, I can probably replicate $30,000, $40,000. I was that cocky, right? I had already had some success on paper and kind of playing in contests, right? And I just, my thing was doubling my money, keep doubling it.
Yeah, good approach.
Just double it every year. Just do it, right? And can it be done? And at that time, the environment was different than it was today in terms of this appetite for nano caps, micro caps. And I learned very early. The environment was just totally different. There was a really good, solid retail base of investors who could buy these things. You had a lot more brokerage firms that would allow you to buy these things. Institutions could buy them. Since 2008, things have changed tremendously.
Why 2008? Why do you think that's the turning point?
So you lost a lot of. If you were investing in these illiquid nano caps, you got just destroyed. If you weren't able to hang in there, and you never want to come back to them, right? So it destroyed a lot of psychology, a lot of accounts, and institutional investors who traditionally would invest in these things, they probably not enough of this, right? The liquidity. And then you had brokerage firms starting to limit your ability to buy these stocks. Making it really tough for you to get people to get involved. So you had this whole chain, which we used to really good. It worked. You get in early as a researcher, a nanocap guy. You're one of the few first retailer investors to find them. All these other retail guys find them, right? And these are all quality companies, by the way. I'm not talking the pump and dump stuff like today. What's working? Then institutions come in at $5 a share because it's not a penny stock anymore. They come in. And you sell to them. So it was this beautiful flow. Now it would really work. Why I was able to support myself in that time frame. When I left Vanguard, I had $30,000. It was, I think, in February '94. The first month, I made 30, 40 grand. Just investing in quality, value, momentum type of a strategy, right? if I told you the stocks I was buying, you're like, what the heck? But they're really real companies. And this is all before .com. And I kept doubling my money every year for several years. And but it worked because the value creation, the value I saw at least, or the formula we had, if you use the Peter Lynch formula, PE of 25, PE of less than 15 on trailing is forward is undervalued, 25 trailing is undervalued. I was a big Peter Lynch fan. It worked really well, and there was a lot of inefficiency in the market, so you could find these stocks early. And inefficiency in nano cap in the market cap space. So it worked well. I was able to just keep doing it. I just doubled my money, and it was working. But the key was that it would happen fast. Now I don't want to say I'm not a day trader at all, but I don't think I don't like to look long term. But at that point in time, that period of time, you could buy these great companies at inflection points of growth, right? Not worry about the 3 years prior, having to just wait that meat of the cycle, get in there. And within 6 to 9 months, your value, what you think the stock is worth in that short term for the short term would be realized, because you had this chain of constant liquidity coming into these stocks and discovery, right? That's how I was able to do it, And then 2008 came along, everything changed.
Yeah, I think it sort of started a little bit earlier than that, because I think Sarbanes-Oxley made it so much harder to get listed. And then I think a lot of those companies that would previously have gone to listing as microcaps, they just raised another round of VC, and they held on for longer, because you had to get bigger to be able to pay for the extra $1 million a year in compliance costs that Sarbox put on all of the listed companies, and it just got too hard to go public at that stage. So do another round of when you're private, get like that scale bigger, and then so all of those opportunities disappeared for small and microcap. I was working as a lawyer through that period, and I was in Australia, but we had companies that had listings in the States, and either debt or equity, and they'd come back, and when we started doing these things, we were doing the 20F filings, and they were just like, the costs for us to prepare them were just getting astronomical, and they were just like, just get us out, like get rid of that listing. It's too expensive.
It's so true, man. And then what you end up doing is, as like been through with this whole period, there's no good stuff. There's no good new IPOs and the China thing ruined the whole reverse merger market. All the quality stuff is all this legacy crap, from back in the day. I mean, I'm buying all these. I like it because a lot of it, but it's funny that you don't see any new stuff that you don't want to buy. I mean, I don't, at least in the IPO land, and that you just don't see a lot. Anything that comes out is like this crappy.
Is that just the States? Do you look globally? Because you're GeoInvesting.
Yeah, so we launched Geo. The intent was to go, we'll go everywhere, right? And then we got caught up in China fraud, and I was like, once I get spoke to China fraud, I was like, what? I don't know if I want to go emerging market right now.
Yeah, tell the China fraud story.
Yeah, so the China fraud story is good, man, because I was investing in mainly U.S. companies, and then I want to say around I don't know when it was, maybe, but somewhere in that 2000 there, maybe 4 or 5, I started seeing some of these interesting companies trading on the OTC. There were a few that were listed, right? But with like PEs of 5s and 6s and crazy growth, like this is incredible. Must be because it's OTC, right? So you started seeing this, and you started interviewing management. You trust in the SEC documents that you're reading in the filings. So, hey, the market will eventually figure it out. I understand there's a China thing, and there's going to be a discount to that, right? So I was actually long to space, very long to space. But they weren't really moving much. I mean, in my nano cap area there, they weren't moving much. And I really wasn't really grinding it to know enough early on if there was a lot of fraud going on. But what I ever owned was just sitting there always, the valuations continue to stay low. And then what you had was we launched Geo, I think, 2007, right? So basically, wonderful time to launch right before the crash, right? And I was like, wow, this is just incredible. There's all this great U.S. stuff, now this China stuff. Let's launch Geo to bring this wonderful information to people, and we'll share it, and be great. And it was free site at first. Geo was free, and I really wanted to help my Dodge ideas, get ideas going, and everything. And they still weren't moving much. And then 2008 hit. And all the U.S. stuff's getting just crushed, right? China was while we're sitting here in the U.S. arguing about what to do and not being able to agree on what direction to go and how to cure the economy, politics played a role. China's like right there just pumping, right? Stimulus, giving money out, United Front, and these stocks all got found really fast, right? So that people still wanted to invest money, and they found them in these China stocks, and then they were like, it was 2009 for us was all like a big China move. Geo was great. We have these long, hey, we're here championing China. It's okay. You also come. While in the meantime, invest in China. We're running long pieces. If you're looking like idiots, a year and a half later. And then it was like I just started seeing like started going to these conferences and start meeting these people actually. I'm meeting these CEOs of these and CFOs of these companies. Just something wasn't right, It was like they couldn't speak, they wouldn't speak, and they had their translators. But you could tell the way they were answering some of these questions was almost like whatever,
bit cagey.
Cagey, we'll say yes to whatever you want, And it was getting to that point where I just kept hearing it, never any negative thing from any of the companies, and you started hearing like one company say, "Yeah, I'm a leader in the industry," 2 doors lit, I'm the leader in the industry.
Same industry.
Yeah, same industry. He's a leader. So, but it started getting interesting, and then we started seeing some Alpha Litter, if you remember him, the Ghost. We call him the Ghost, but his name is Alfred Little. It's actually John Carnes is his name.
I didn't know.
Yeah, so he then you had Muddy Waters come out with some stuff. So we started, maybe hey, we don't think we're wrong yet, okay, but we're willing to at least prove that the short seller is wrong, at least not be blind about it, right? So we decided to go that route and hired a PRC attorney who has actually lived in the U.S. but to start working for us at Geo to start helping us understand the legal framework of things in China. Some of the accounting, because he was really well versed in financial accounting also, or financial analysis. So it was a really good thing for us. And then I took place in a private placement. I was buying some paper from somebody who took place in a pipe, and I just didn't feel right about the way it was, how that conversation was going, and how we were such in a hurry to sell it. To me, like it's like $1.50, but it was so much growth coming, Yeah. And that was one of the companies actually we busted later on. It was the last company we really busted in China. And then so it was. Let's go to 2010ish. I think it might have been like the summer of 2010. We're doing still making money going along China, a lot of it, but more skepticism is coming out, and at this point I had the attorney give me a letter, at least an opinion letter on corporate structure, filings in China. So a lot of times what we were doing was we were referencing SAIC filings, which are filings in China that file at the provincial level. So a Chinese company has to file that's based in China, that does business in China. At every place they have do business, I guess, at the provincial level they have to file these filings, and then they aggregate them, and then you have a consolidated number you can get. So you could get these things relatively easily, and those numbers weren't matching SEC filings, the numbers by drastic amounts. So of course the management teams of these Chinese companies, the investment bankers of reputable bankers, it's all kinds of GAAP, U.S. GAAP accounting versus IFRS accounting versus China. So it's all different. It's nebulous, right? So how do you prove it, right? So most investors are going, yeah, that sounds right, and that's in the SEC docs. Auditor signed off on it. Lawyer signed off on it. You got a reputable investment banker. That's who I'm going to believe. We're not going to believe these bloggers writing about it. But then I went as far as our PRC guys said, like, no, everybody else is wrong. These things do matter sometimes, and here's when they matter. So that's how we started trying to say, okay, here's when fraud does matter, but here these things do matter. Understanding corporate structure, VIE structures, what when the filings matter, when these numbers are accurate representations of the company, and we wrote about that, and there was still people who didn't believe us. So okay, And then I had this is great. This college kid called me one time, and he says, I love what Geo's doing. This is the summer of 2010. I'm with your bullish kind of. I'm bull on China like you guys are. I understand you're still a little pessimism in some areas, but send me to China, and let's look at these companies. And I said, I already had a small China team starting to percolate there with our PRC lawyer guy. So let's do it. So we thought 50 companies. Said go do this, and within like 5 days, like they're all frauds. Get rid of them all. He looked at like a 50 or 20. So like the following few days, I went through every one of our companies. We had a lot of coverage in these companies. I wrote a note suspending all coverage on these companies, and due to our other due diligence, we're a little worried. And for every company we went through and wrote down our concerns now with each one. It was a really laborious process. And then we said, okay, you know what? It can't all be frauds. So empty factories, cagey related party relationships, feudal between brothers. It was just all this weird stuff, man. You couldn't script it better. And I said look, let's still do the right thing because we're still long guys. We're not short sellers yet. Let's at least now work with investor relations firms. Let's work with investment banks. Let's help you find the fraud. We'll let you know what companies are fraudulent so you can, drop them. Do the right thing. Well, when you realize that 80% of these are frauds, that's their whole income stream. They're not, they'll say yes, right? And then when it comes really down to it, we finally got one or two firms to say, yeah, you know what, show us their frauds, and we'll do that, right?
But it turns into a risk for them at some stage, right? Like they've got to be nervous about the fact that they've been associated with this fraud. Like you wouldn't welcome that kind of insight from somebody else. Yeah,
you'd hope so, right? But then you have behind disclosures. I mean, who trusts you? You never trust a fucking 10K anymore, right?
But once you become aware of it, now you're really on notice. Now you know. You got to.
Well, the problem was like if so to put the tough decisions the SECs in or an exchange, right? You have a GeoInvesting telling you it's a fraud, right, with all the evidence. But then you have the CEO showing you their evidence, like filings in China and stuff. The regulators are also kind of in such a tough situation where they can get sued, right? Then I think the Nasdaq's been sued, so but I don't think that's why they didn't. I mean, it's all about fees, right? But there is still a fine line there. Where I think what's sad is that it's just happened. We're not 10 years removed from this whole thing, right? That's when this fraud began, and regulators still haven't really taken that information, that all the tools that we used, Muddy Waters, Citron.
What about
Geo?
Carlisle? Did you see them in there?
Carlisle's great, man. Yeah, because he was one of the pioneers of this whole thing.
Yeah.
Using the information that we all used to put together a template that the regulators could say, here, to every company that wants to come here in the U.S. and list from China, for example, here's a checklist that auditors, lawyers, have to follow, investment banks, before you bring them public here. For Christ's sake, make sure they have their licenses to operate. The simple things, right? Make sure you actually have cross-checked an SAIC filing with an SEC filing, right? And they're still not doing it. And I just 2 weeks ago or 3 weeks ago, I think they're pass. Congress is trying to get some law passed now to basically, I might just look good in my opinion, to delist if you have any ownership in your company that's controlled or ownership by a state-owned enterprise or a government entity in China, you can't be listed here. Or if you don't allow your auditors to be inspected, you'd be delisted, right? Well, the reality is that auditor thing was always here. It's been here for 10 years. Okay, so that's not new. And then what they said in the ruling was, I think, more like you have to kind of attest that you don't have any ownership interest from, I don't know, They're just going to freaking lie. Furthermore, it's about like a 3-year process to get these things delisted potentially. So there's so many more things you could put in there. Make sure that my financials match. Make sure they have their licenses, right? Make sure, you've gone through this whole red flag list. Make sure there's accountability by investment banks if you do bring this stuff here. There's not going to be any kind of incentive. It's going to keep it going.
It's really hard if you're I admire the fact that you're able to switch from long to short those companies, because I had a little bit of experience with them as a lawyer. We had some companies that wanted to set up operations in China, and we went and helped them do that. And it's a very different process to the one that I was used to in the States and in Australia, where it's a lot looser. The structuring's a lot looser, and there are some weird intellectual property rules where after I think 5 years, the entity owns all of the intellectual property of the parent company, which you don't want that as there's some very odd things, and it was all documented, and it was a much looser structure than I was used to. And so when I found them when I became a full-time investor, when I found them as an investor, you're kind of conditioned as a long guy, right, to look at things that everybody else has sold this thing off. You still think it's cheap and it can work, and so you're trying to look through and see, like, what is it that everybody else is seeing that I'm missing? And with that China stuff, it was hard. Like, maybe it's just the fact that these are Chinese companies, like they're just off the run. Nobody really. It's a weird structure. Maybe that is the thing that is depressing them. But then, so I made some mistakes through there. Long stuff that got blown up, but there were big funds in Los Angeles. I won't name the name of the fund, but I think they put in $100 million into Sino Forest, like 2 weeks before it had blown up. And they went as far as to send an analyst to China to look at the forest. And they said, there's the forest. They just didn't own the forest.
Right.
What can you do?
We had a cemetery. We actually wrote an expose on a cemetery company. Same thing. Here's our cemetery. Well, it wasn't your cemetery. So that's common. And this came to mind. Who do you believe? Do you believe Geo or do you believe the auditors? From the regulator's point of view, it just had to get to the point where you eventually had to do so much work to get it done, and it was worth it then because these were 100% frauds. So from a business point of view, so we eventually ended up having to short these stocks. No one was paying us to do due diligence. We weren't going to get funded by anyone. So you know what? If we're going to do this, because we wanted to clean the space up still, we wanted to clean it up, we'll start shorting. And so we started shorting these stocks.
Let's talk about Geo a little bit. What is Geo now?
Yeah, so Geo is, when we first launched Geo, was the real single line mantra was to bring, institutional type quality research to the everyday investor, going bullish kind of ideas. And then moving forward, as we went through the whole China phase, now it became we want to do that still, but also have risk, portfolio protection, letting our members know when we come across fraudulent companies, or not even made fraudulent, but maybe some red flags before you invest. And it's more of a learning process. We teach our membership base how to look for great companies, but also how to identify risks, how to know when certain risks are worth investing in and maybe some aren't. And through that process, and we're putting out constant research all the time with that every day, and our research becomes a learning process the way we do it. It turned into a situation where we were short sell. We were known for being short because nano cap, micro cap, that's not sexy, right? And even we were doing a great job there. Everybody forgot that who we really were. So there was a period of just between like 10 and 14 were these short sellers guys, right? So the last few years, I've been trying to rebrand a little bit. Hey, that made us better investors. It was something we had to go through. Because we were long these stocks, we felt we had to go short, or at least tell you that we were wrong on that, and help you understand that risk. And we, along that path, we start exposing pump and dump stocks. We exposed basically we exposed 12 U.S. China frauds and 22 pump and dump stocks along the way. So I think that we're in a position as, hey, we've done it all, right? We're finally long, but we're not long, blind longs. So the way what Geo is today is more of, hey, we're still 100% all about, going long, being bulls, but also understanding when you identify risk, we should let people know about it, and more of a risk portfolio protection pieces for our members. we're not always out there putting out short pieces all the time anymore like we used to.
It's been a tough time to be a small and micro cap investor. It's such a beaten up, bombed out part of the market at the moment. I don't know if we're at the bottom, but I think we got to be. It's stretched now. It's starting to. Do you think it's starting to look interesting?
Yeah, I do. And 2019 was a very interesting year. So you started like mid 2019. Everything I talked about, this whole like chain of events making it tough for the microcap sector to keep getting kind of like the retail investor institutions. Well, I think it's just got to a point where it's just the bloating of these big cap valuations.
Yeah.
The pump and dump, this bullshit with crypto and pot just got overplayed. That the money has to go somewhere now, right? And then the smart money knows probably at this point that the smart money's in this little nano cap, micro cap, arena. This I call them tier one quality companies. We call them.
What makes it a tier one quality company?
There's like an interesting checklist. I mean, if I had to tell you, have some revenue. You got revenue, at or near profitability. But one of the biggest things is capital structure. We like these companies with really nice capital structures where with share counts aren't bloated. So in the U.S. at least, once we start getting into this like 100 million kind of outstanding share count for these small companies, it's been our experience that they've just like been that's a low quality micro cap. It shows that management has had to dilute the stock for years to grow or try and grow, and they've been unsuccessful at it, right? So it's a hint to us. And then there's this the usual, we want companies that have revenue and are near profitability or at it, that don't have to continually tap the markets to raise money, and preferably that's been around for maybe 10 or actually 15, 20 years. These old school companies, there's a lot of them out there. So that's kind of that. If you had to really sum it up really small, or I'll even put a turnaround company in a high quality company in one of these in a tier one, if we think it's going to get to that kind of gravitate towards that level of confidence.
Let's just go. So 100 million shares on issue. Why don't they just do a share recombination, whatever that's called?
Right. So people ask, so just do that. And what we like to look at too is like how many of those they do, right? So a lot of these companies will keep doing this to make themselves look better, right? But then we look, if these guys have done 5 reverse splits,
right?
We know what they're up to, right? And they'll just reverse split, issue more shares, right? Dilute the hell again, stock goes down, pump it up, reverse it again. You see a lot of that now.
What's the issue with them? Is it the fact that they're just not making enough money to they're just not getting the escape velocity that they need to kind of justify the cash that they got in them? Or is it that management's just ripping out too much cash?
I wish it was like your first thing you said there, because that mean they actually had an intent to grow. But I think what it really is, I think it's a game.
Yeah.
I think there's more money to be made in the pump and dump game for some of these companies than actually running a company.
Right.
So let's make ourselves the pump and dump game has changed so much over time. It used to be like these obviously fraudulent companies that had maybe nothing going on, no revenue, with the mailers, right? Pump and dump mailers. Now it's actually, listed companies that have a patent, have a license, have a product. Maybe they realize it's just too hard to grow anymore. We have this wonderful asset in a public company. Let's just keep this whole. Let's just pump it, make some money, do it again, rinse, repeat. That's my theory of mine.
I think the pump and dump's gone up market. I think that Moderna, where they released the preliminary results of like a 15-person trial, and then that afternoon you drop a $1.5 billion capital raise on the market. It's like, well, I've seen that a million times before in small and micro cap land. I'm not falling for that one.
No. Look at Genius. I don't know if you have a GNUS. Look at that chart this week. It's gone. It's at the Netflix of for kids. It's actually, I think it's been around for some time, and they did an offering at $2-3. Stock's $11 today. I mean, it went up into the offering after the offering was announced.
This is a very frothy market.
You would never see that like 20 years ago, man. Right? Like dilution is bad.
Yeah.
Well,
it's like it is a late 1990s thing. Like when we're doing a placement, we're doing an issue. We're going to have some cash, and all of a sudden the stock it rallies on that.
But it's been 99. It's been that for 10 years, right? It's been this whole thing.
No
it's
news
crazy.
is bad news in this market. Like just sending out a press release saying, "Hey, we're still here." Market rallies on that.
But I think right now though, like back to I got a little off track. I'm sorry. I think we are at a point now where it's the smart money is starting to find these companies, and the retail investors are probably buying the Teslas and stuff and everything. And we talked about that earlier. So I think that's really good for us. And I'm actually seeing the momentum kind of. When I was first early in my career, it was a great formula. I would look for momentum companies that were still undervalued or going through turnarounds, whatever. And it worked really well. It was timely. I think we're kind of before COVID, we were kind of there, I thought. A lot of these wonderful companies were being recognized relatively, their value was being recognized quickly by their investors, and you saw a lot of volume coming into them. There was a lot more liquidity coming into that space.
How do you define momentum?
I would just look at, when I was just the new high list, 52-week new high list, I would just use that. Sometimes I'll use a 3 and 6 month high list. But when I was my career man for 20 years, that's all I would use. There was 20,000 stocks there. How do I reduce the universe? I didn't like screens too much because of data. You couldn't trust the data.
Yeah.
So I was like, if I can find companies hitting new highs and find out the reason they're doing it, is it bullshit or real? And they're still undervalued. Maybe that's telling me there's an inflection point going on here. And, the herd mentality. So I could buy great companies that everyone else is going to buy, and I could make money really quick. That's how it was in that, 10 to 20 year period for me. So that's how I define momentum. And I think it's working again, actually. And it still was working in the small cap, big cap, large cap area for the last few years, right? But it stopped working in the micro cap, nano cap land. So the last 10 years, I started, all right, let me reset a little bit, or the last 12 years. Let me start treating investing like an art again, like an art. Let me go back and find these companies well before they hit highs. And because the strategies, they're not, the quality stuff isn't hitting highs anymore. It's all shitty quality. So I've learned to become actually a much longer term investor, which I love more than ever now. My longest holding is 13 years now. Back then it was probably 9 months, when I first started. And so now I'm combining, let me find these hitting companies, 4 or 5 years, I can get price I'm never going to get, establish small positions then, and then as everything's proven, plan is proven, momentum comes in, I'll really jack it up, maybe even sell that momentum now. Maybe I'm being patient now, and I might sit 3 or 4 years not making money, but man, if you can make, get really great price, it's worth waiting instead of buying it, 3 times higher at the inflection point of, the momentum.
So previously you were hunting for them on the 52-week highs list. How are you finding them now?
Yeah, so that's still my bread. I love it. It's fun to me, right? But so I still do it. But so our team, we're reading press releases. Every nano cap press release that comes out, we're reading it. All the SEC file, as long as they have if you have 50 million shares outstanding or less, we're going to look at you and read your press release, read your earnings report, read your conference call transcripts, and call management when we give it down to like a 10 stock on a bucket through our research process, right? So I know it sounds like, all right, well, the new high thing to me was only a way to take 20,000 stocks and reduce the universe. We don't need them all, right? So I bet that same thing would work looking at the new low list. You could look at a new low list probably and still run the same kind of
Well, I think it's a good approach. It's one of the things that value guys, it's a trap for value guys that they want to go and look at the 52-week low list because they feel like you're getting a bargain, right? But Wes Gray told me this one, that there's the momentum is real. So if you're buying stuff off the 52-week lows list, you're buying stuff that's got negative momentum. You're buying stuff that's likely to go down over the next 12 months. Whereas 52-week highs list, like that has positive momentum. It is likely to be doing better. And then if you can get it cheap there, that's a pretty good strategy. That's a solid strategy.
It really is. There's nothing wrong with making money short term, right? There's nothing wrong with that at all.
I like long-term ones that turn into short-term ones.
Yeah, right. Yeah, excellent. Almost like when you talk to somebody about like a pure long-term investor that you invest short-term, they get like oh you're down here, right? Well, we want to make money, so why not have a little bit of everything? Why not have a portfolio that can have your long-term core holdings that are going to multi-bag over the next 10 years? But what about these other ones that can double short-term? And that's kind of how I position my portfolio now. over the last 15 years or so.
Well, it's just the way that it moves, right? Sometimes I do a whole lot of work to figure out this. I think something's going to make like 13%. I think I can compound 13% over the next 3 to 5 years. Sometimes you get lucky and you get all of the gain in the next quarter. Like, what am I going to do? Hold for 5 years to get the IRR that I predicted when I first bought it? No, I'm going to cash it in now.
Just so you can say you're a long-term investor?
Yeah.
No, you want to take your money now, right? But it was funny though, when I was early on, I was reading a lot about different strategies. I intuitively thought that buying the stocks at new lows would be interesting, right? That's what I went into it first, and I took for like a couple months or a few months. I took the new high list, new low list, and put it all together, and tracked them all, and didn't really see any kind of advantage from doing that, right? Maybe even worse. And I said, no, wait a second. So all these value investors, by strict definition, are looking at new lows and shitty companies, right? So they're not looking at new highs. So I have less competition from really good guys who could probably actually do good analysis, right? So you have probably I thought, all right, I could probably be competing with some maybe less savvier guys, maybe. I'm not saying that to be rude at all, but so I thought, okay, the really smart guys are over here, And I thought, well, what if I can, be over here and find, like you said, find great value at you can be a value investor.
Yeah.
Looking at new high lists.
Yeah.
We're just trying to find value, man, at any price, right? And whatever way you can do to make the process easier for us to get through, that works for everybody. You go, just do it.
Well, that's really the trick, right? You have to separate in your mind what the price has done over the last 12 months and what the value of the company is, because those are two different things. It could be cheap on the 52-week highs list, and it could be expensive on the 52-week lows list.
Absolutely, man. Absolutely. And if there was no chart, how would you value a company? Let's say you were not even you had no reference of history of price, right? And you came there the first day and you just saw one blip. How would you value it? And that's, what will happen is charts are like parabolic. They may come down on a technical basis, right? But you take it all out, right? Take it all out. Maybe you'll be able to add to your position or something. And that'd be pretty interesting.
So one of the things that I saw when I went through your brochure, or the sheet that you sent through to me, the strategy buckets. Do you want to talk a little bit about how you think about the strategies, long, short, and going down through the buckets?
Yeah. I put some thought into that maybe a year or so ago, because whenever I'm asked what do I do, I'm like I always had a different answer depending on what bucket I was investing in at the time, right? So I basically like to have my bullish side, right? My bullish buckets, and then my short buckets. And then in the bullish side, I have my core holdings. These are the really, maybe your classic GARP kind of stuff. Some of these momentum strategies we're talking about, contrarian pullbacks. But these are all I would consider high quality companies that are in that kind of any one of those mini buckets there, right?
When you say high quality, it's something that you expect to be much bigger in the future.
Yes.
And you're just looking for an opportunity to buy it at a sensible price now.
Yes, and I'm willing to hold potentially 3, 4, 5, 6, 7 years. That's my core, in my army, if you want to call it that, right? And then you have, since I'm a full-time investor, I need to make money in the short term, and there's nothing wrong with that, obviously. And so what are those strategies going to be? And that's where you get to my special situation stuff. If we find a catalyst that we think is going to maybe materially affect the valuation of a company, an acquisition going on that may do the same thing, balance sheet restructurings, that fix the capital structure, activism, non-dilutive offerings. That's a great, by the way, short-term strategy. So these.
What was the last one?
Non-dilutive offerings.
Non-dilutive. So how are they doing that?
So you have a situation where every time we see a filing for a company wants to raise money, or issue, you see an S3, for example, and we all assume it's called a shelf, right? That a company puts out a filing, they're going to issue shares. So issue shares is dilution, right? So every time we see that document, we're thinking dilution. They're going to dump all these more shares in the market, which is going to dilute the earnings per share and your ownership. And stock goes down, right? Well, the stock goes down too because of price discovery. You have to give a discount to make the offering go through. But there are these, but not all these offerings are really offerings of new shares. a lot of times are offerings by current shareholders that want to sell a bunch of stock, right? So, but you have to still entice others to buy that so the stock falls like 20, maybe 20, 50, 20, 30%. And there's no change in valuation of the company at all, right? And you're like, oh, just you have a big holder that wants to get out of this thing, which is actually great for the company.
They're just managing the sell down.
Yeah. And you'll see those are some of the best, you can see 20, 30, 40% returns really quickly on those bounce backs once the offering is done. And sometimes even on a dilutive offering, you'll see new shares come in to pay down debt in the balance sheet. Well, you're actually de-risking the company.
Yeah.
So maybe it is better. And then the net effect isn't that bad in the end, right? So those are great little bounces we like to see. And we'll play that in like big caps. I'll go large cap on that stuff. I'll start going up the food chain in those ones.
So what's your definition of nano cap versus micro cap? Where's the
so
cutoff?
nano cap, 50 million or less is nano cap. Between 50 and 300 million is micro cap. We'll look at companies if we're like 500 million or less. I'll go that high for my core strategy, but I'll go as high as 4 billion for these special situation stuff though. Which you go into small cap land there, right?
Yeah, that's probably the bottom of mid cap maybe. Yeah, that's probably the top of small cap, I guess.
Yeah, and that's Peter Lynch used to be there. Peter Lynch would be 4 billion or less, and that's why I guess kept that.
I think it's a good number. I like hunting in that. I think that's a good cutoff. Like I think above 4 billion, it's a slightly different strategy to below 4 billion because above 4 billion, they really got to have professional management. They need to be pretty robust. They got to be able to. They've got guys who are. It's sort of beyond just the engineer, founder, or whoever was in there. It's like a professional management team who are looking to grow it into a monster. Below that, you're kind of looking at the founder, entrepreneur, and it's almost like private equity, listed private equity.
Absolutely, yeah. It's a whole new ball game there, and plus you got more competition of ideas there looking with you. So it's so true. I'll give a great example of that one was a stock that am I allowed to talk stocks here?
Yeah, absolutely. As long as you want to, yeah, go ahead.
Yeah, I don't own it anymore, but it was a BXC was a symbol. It was a blue link, so it's a round tripper. So it was a multi-bagger to a multi-bust. And so it was a company that we had bought. It was a leading building supply, wood building supply company. And they got crushed in the recession of 08, 09. And to save them, a PE firm came in, Cerberus Capital, and took a 50% stake in the company, I think, a 51% stake in the company. And somewhere along that for a couple of years, I think they tried to take them private. They said no at a really cheap price. So there was a lot of. So fast forward to 2000, I think maybe 16 or 15, we started looking at it ourselves. There was no. They had went to Pennyland, did a reverse split. It was about $5-6 a share, and there was every single alpha article was negative about it, which turns out to be 4 years later probably right. But so they kept promising they were going to sell the assets, delever the balance sheet, and pay off all this amount of debt they had, and get costs under control, cut out a lot of redundancy in the sales process, get closer to the customers. It was all things that made sense to me. So I decided, I liked management portrayal of the story to me at the time. So we bought a lot of it around $6-7. Got as high as like maybe 10, 11 and pulled all the way back. And I was holding for 2 years, and that's everything just destroyed like in a few weeks, right? Like what's going on? Because they were making progress, right? They were selling some stuff, assets, revenues were starting to grow a little bit. Well, it turned out the Cerberus wanted out, Cerberus Capital, so they had to do like a offering at $7 a share. So the stock went from like 11 to $12 to $7 relatively quickly. Unfortunately, I already had so much of the stock, I didn't want to participate in the offering. But they sold it. Second they sold it, management went and bought some stock. Stock got $11-12. They announced a transformative acquisition, which they couldn't do when Cerberus was there. And I think part of the reason that Cerberus might have left was because Blue Links wanted to do this acquisition. Cerberus probably didn't want them to do it. We're going to find out why in a second. so the stock goes to $50 or
wow.
$35, like in 2 days, basically. We sold most of our position on that run, and then we held a little bit and sold the rest like in the 20s. So it just turned out that they used so just what didn't make sense was they spent all these years getting rid of debt, right? And then they went and piled on more debt to buy this acquisition, right? It was a really great, on paper, acquisition if everything would have worked perfectly. And we were, probably in the 7th inning of the housing recovery, and they kept saying, hey, we got a few more innings to go. We're still not at peak yet. Well, we might not get to peak again. Who knows, right? So the stock down back to $6-7 a share. They just buffed the whole thing. We had a lot of bad things going on, right? And the economy did not keep on going. You had the interest rate situation. You had the yield curve crash. Everything went upside down. So now the things not go to their plan. Housing recovery slowed. So they're hurting now. But that's an interesting thing. That things there. That was one of our special situation buckets. You had a restructuring and the debt, right? You had an acquisition, and you had a non-dilutive offering, but staying long term, that would have been just a horrible, right? So that's an example of a short term thing we look at, though.
Is it interesting now, back at $6 or $7? I'm
gonna look at it. I looked at it like a few weeks ago, and I might spend some time on it again. But I just don't like that decision they made there.
Yeah.
And they got it so cheap. They got a great deal. I got to wonder why they got a great deal. And now I'm maybe seeing it now. Maybe we're seeing this execute. They're not able to execute how they thought, and I don't. It's probably because of that. And the synergies weren't all expected, but it might be worth looking at. I don't love that. I hate that industry. Hate it. So you probably not see me going there again. It was a situation where I just saw an incredible catalyst coming over. And the catalyst originally was just paying the debt off. Once they pay the debt off, there'll be this little, maybe a double out of it. But then all this other stuff happened. And I'm like, oh wow, I got this bonus thing that's not going to last forever. Got really lucky with it, and move on.
Do you ever look at equity stubs where there's a business that's gone bust? They got net operating losses. They got some cash. They got some smart shareholders who are trying to, control the. You need to maintain the shareholders, the current shareholders, so you don't lose in net operating losses. And there's some smart investor in there. Do you ever look at those kind of things? Do they fall into your special situations bucket?
You really don't. It sounds interesting though, but they really don't. I try and stay. I know where I'm able to go, not able to go. But
I've torn up a lot of money in them, so I'm just interested to know if anybody knows how to do it properly.
Has it worked?
No, they've all been disasters. Just because I think the guys who get control, often it's a private equity firm, smart, brand name private equity firm, KKR or someone like that, holding it, and their time horizon's just so long. They're just waiting for it to drift down so they can keep on buying a little bit more. And they know that, you're going to get bored after 2 or 3 years and move on before they do anything. So it's never really worked out.
They got money to waste too, right?
Yeah.
They go,
it's like a $50 million holding for them in a multi-billion-dollar book, and it's just for the effort to kind of turn it around. So they just it just doesn't ever do anything. They got to assign some associate or something to it to write it, and they just can't do it. I'm too busy, got too much work on.
But my I chapter 11s I love chapter 11s. I made a lot of money in the years coming out of especially the .com dot bomb
in the equity.
In the equity, yeah. After coming out of chapter 11, I didn't really invest in the chapter 11, but I remember investing in these telecom companies coming out of chapter 11, which is amazing. And so I love that. So when we have recessions, I'm always looking for these.
What's a recession?
Opportunities. Well, yeah. What is a recession?
No, that's something that used to happen a long time ago.
So it doesn't happen anymore. It's a day or two of a market going down or something.
Yeah.
That's it.
That's a 1 point down day.
Yeah. So then I have my long shots.
Yeah.
I want to really get into this one. I'm sorry, Toby, because this is my favorite area to play. I love playing here because everybody hates it. Everybody thinks penny stocks are all fraudulent fucking companies. With no management team, it's these beer sluggling, overweight dudes, just scam people. Well, they're really not. I would say most of them are. Okay, there's just so much beautiful stuff there, though, sitting there waiting to be found. This is where you'll see a lot of you'll see 70-year-old, 80-year-old management team just sitting there waiting for something to happen. And they did it right. I just have confidence in them. They're going to do it again, and things change. Things happen, and markets change. Environments change, economy change, and they will adapt. But yeah, something went terribly wrong along the way, right? To make these stocks penny stocks. And then, but there's still a great business value there. There's a great brand, potentially, great technology. Someone new comes in, and alleviates that old management team of their responsibility because they just can't adapt. But this new team comes in and fixes it all. It's tight. There's like great capital structures on some of these companies that meet our requirements, and you can just sit in these things, just wait. And this is where is one of my favorite places to play. And then they're not penny stocks, 10 years later. And that's the most fun I have because I can sit there with a little bit of money, take very little risk,
Yeah.
and not have to sleep at night, not worry about it, right?
So that's the key, right? You size them small.
Yeah, the size is small, but they become huge later, right? But now I don't feel as bad as I can sleep at night because they've proven to me for the last 5 years they can do something, right? I'm going to be betting on them now. And it's great when you have these these zero inning the first inning of a recovery, right? And you're buying stock at a price you'll never be able to buy in the fifth inning, right? But even when the fifth inning is still fucking great, right? You can pile them more, right? And have confidence. If you got them from inning 1 to inning 5, and they've executed along the way, now you got this great confidence. Then you just go load the ship, and then you wait till 7th inning or whatever. And you'll see a lot of takeovers in this like eventually you get taken over, a lot of them. But what I love about it is like this little bit of risk in the very beginning, money, no capital, and it can become a lot of money later.
Yeah, I like that too.
And it's just everyone's ignoring them. It's beautiful. I mean, no one can buy them. You can't buy them at brokerage firms anymore. You got to call the order in sometimes. It's you can't short them. That's great. So you don't have the short guys aren't going to play in this fucking field in this mess, right? Everyone's ignoring them. Smart investors, dumb investors, everybody. So it's just beautiful. And then the short side, you got the China stuff and the pump and dump stuff. And there's still China fraud out there now. It's just amazing. It's pretty bad.
Yeah, I just about screen them out. It's just too hard.
You can't. I mean, I'm long one right now. I'm probably down in it actually. I'm still betting on it. But the stuff you see now, these filings, they're still here public without their licenses to operate in China. They have a brokerage license. There's companies. They're doing online brokerage. You're not allowed to do an online broker in China. You don't have a license to do it. You're still doing it. You say you're not allowed to do it. You say so this fancy way of doing it. So it is legal. So if it hasn't been voted upon or hasn't been really judged upon yet in China yet, then we can come to the U.S. Oh, by the way, get a license here. It's just ridiculous. So it's just crazy. So and they're just like they're taking the art. And what's illegal about it is I'm not going to say names right now. But what's legal about it is so China has this real capital flight problem, right? That RMB leaving China, right? To the U.S. or to Hong Kong, whatever. And so in China, you can't take RMB to dollars and move them out to invest. And these firms are facilitating that process.
Right.
And our thing is, at some point, China's going to care, especially right now with all the attention going on, right? We love it here in the U.S. because you bring in U.S. dollars to the U.S., right? I mean, that's okay from our point of view, I guess. That's what's going on there. But my fear is that I think a lot of pump and dumps are happening from this whole money too. So I think a lot of that money is coming from China, to either Hong Kong accounts, where they can buy U.S. companies, stocks, or U.S. accounts. You can figure out who those two firms are, and then just pumping these Chinese stocks. I think a lot of it's coming from that. Because it's not making sense right now. I don't know if you saw what's going on GSX.
No.
You got to read that story. So GSX, you got a short report published by Grizzly Research.
Yeah. Citron
and Muddy Waters. Not too shabby, all right. So stock's hitting highs right now, and it's in my opinion, it's 100% fraud. They're basically what they're doing is apparently is it's an online education company. A portal in China. So if I understand it correctly, they're buying a lot of their users to make it look like they have users, right? And the fraud was busted to a point where Grizzly said, "Hey, we have the company that sold them the users. Stock's up like $10 instead, like from $30 to $40. or 35 off that, off all that. And it's like regulars doing nothing about it.
Crazy.
And that's just it's really scary, man. Yeah. So, but
so Maj, if folks want to get in contact with you or follow along with what you're doing, how do they do that?
Yeah. So they can email me directly at maj@geoinvesting.com. I have no problem calling me. My phone number is 267-246-3263, my mobile. And you can go to geoinvesting.com also and check out our site. And just reach me through there, support@geoinvesting.com, and reach us there. We have a free trial at our thing. It's $408 for a year membership, about I think $300 for 6 months. And we also have a monthly membership we just put in place now. And there's a free trial with it, 7-day free trial. But I'm always like, if you want more time, I extend it and everything.
And you're on Twitter as well. What's your Twitter handle?
Yeah, so at Maj, GeoInvesting. And then GeoInvesting has its own, is at GeoInvesting.
I'll link those up in the show notes. Maj Soueidan, thanks so much. GeoInvesting.
Oh, thank you, Todd. That's awesome, man. Thank you for having me.
My pleasure.